Welcome back to another video. Soil here, and today I want to talk about the differences between two of the most popular price charts for trading, which are Candlestick chart and Heikin chart. We're going to explore the advantages and disadvantages of each one, and we're going to see in what situations they can be more helpful so we can effectively use them for trading. Alright, this is a candlestick chart and this is a Heikin chart, same period and same time frame, and as you can see they are generally similar to each other in showing us the overall direction of the market, but fundamentally they are different and they provide different details, so in practice they can be used differently when it comes to analyzing the details of the market. The building blocks of these two price charts are candlesticks, which somehow they look similar to each other, but they are built completely in a different way. For candlestick chart, each candle is built based on 4 pieces of information: opening price, closing price, highest price, and lowest price for each time period. For example, right now the time frame is daily, so each candle represents a day. For each day, the price that the day started, which is opening price, the final price traded at the end of the day, which is closing price, and the highest and lowest price during the day. If the closing price is higher than the opening price, the body of the candle is green, and if the closing price is lower than the opening price, the body of the candle is red. I don't get into more details related to different types of candles because it's not related to the subject of this video, so if you're curious and interested to know more about candles and patterns, just check the description of this video. I have comprehensive guides on this subject. Alright, so this is how a candle is built on a candlestick chart, but on the other hand, on Heikin chart, we have a kind of a similar candles, but they are built differently. Heikin candles are a kind of a branch or another version of normal candlesticks. Heikin candles are built based on the data from 2 periods. Besides using the opening price, closing price, highest price, and lowest price of the current period, it also uses the opening price and closing price of the previous period. For a Heikin candle, the opening price is the midpoint of the previous candle body. In other words, previous candle opening price plus closing price divided by 2. The closing price of a Heikin candle is the average price of the current period data. In other words, sum of open, high, low, close divided by 4. The high of the candle is the maximum of high, open, close, and similarly the low of the candle is the minimum of low, open, close. And similar to candlestick charts, when the closing price is above the opening price, the candle is green, and when the closing price is below the opening price, the candle is red. Alright, now you may wonder what is the point of this price transformation. If you have ever worked with candlestick charts, definitely you have realized that sometimes the ups and downs of trends are really confusing. For example, in an upside movements of the price, you may see many bearish candles as there are bullish ones, or in a downside move, you may see many bullish candles as there are bearish ones. But if we look at the exact period and time frame on Heikin chart, as you can see, we have strings of green or red candles following one another. Whenever we have strong upside movement or downside movement, you can see that we have consecutive red candles or green candles, and this better shows us the market sentiment. But on candlestick chart, it's not like this, and you can see that we have more noises, and this can interrupt us from the main direction of the market. And even the more tricky part with candlestick chart is that when you want to analyze candlestick patterns, for example, you may see a bullish pattern in a clear bullish trend just next to a bearish pattern, and for beginners this is really confusing. The reason is that candlestick chart shows the price as it is, and they tell you exactly how much the price has changed in a period of time. This is a good thing, and for trade entries or exits plays an important role, but as I said, this causes some noises on the chart, and this is a little confusing, especially for beginners. Heikin chart tries to solve this problem by using data from 2 periods, and because of the way that Heikin candles are calculated, Heikin chart shows a smoother price movement on the price chart, as you can see. But this comes with a cost of losing the exact movement of the price. When a Heikin candle opens, the opening price is not the current price of the market, but it's an average of the opening and closing price of the previous candle. And also when it closes, the closing price is not the final trading price in that time period or anything very close to the current price of the market, but it's an average price. So when working with Heikin chart, you must know that when you want to enter a trade, the closing price of the current candle or the opening price of a new candle are not the exact current prices being traded, and the price that you can enter a trade may be different than the closing price or opening price of a new candle that that is forming on the chart. So when it comes to trading on low time frames like scalping or day trading, Heikin Ashi chart may not be a good choice for spotting precise trade entries or exit points because Heikin Ashi chart doesn't provide precise data on the chart. You can still use Heikin Ashi chart for scalping and day trading to filter the noises or better identify trends, or you can use Heikin Ashi candles for trading signals as part of your trading strategy. But if your strategy doesn't provide a good risk to reward ratio and you need precise entry points, you must use Candlestick chart for your trade entry or exit points, because Candlestick chart shows the precise movements exactly as it is and it provides all the details without any filtering the noise. Heikin Ashi chart is an excellent price chart that can filter the noises and show a smoother movements of the price on the chart, and this makes trend visualization very easy. It's a perfect tool for swing traders, mid-term traders, and even long-term traders because Heikin Ashi chart allow them to identify trends and enter into positions easily without being interrupted by the noises. And of course, precise entry or exit points doesn't matter to them as long as they are able to identify a trend and run on the trend to get the most out of their position. But for scalpers and day traders who need precise entry or exit points in their strategy, Heikin Ashi chart may not be a good choice for this, and using Candlestick chart could be a better choice. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.